Have you ever noticed how the smartest investors seem to zig when everyone else zags? They're buying when the crowd is selling, staying calm when panic spreads, and somehow they always seem to be one step ahead. What do they know that you don't? Today, we're going to talk about something critical, something that most people are completely missing right now. The recent surge in silver prices isn't just another investment opportunity. It's not about making a quick profit or jumping on the next trend. No, this is something far more significant. It's a warning signal from the financial system itself, and if you understand what it means, you'll be able to position yourself in a way that protects your wealth and potentially grows it while others watch theirs erode. Let me start with a story. Back in the 1970s, my mentor told me something I'll never forget. He said, "When you see precious metals start to move dramatically, don't just look at the metals themselves. Look at what they're running from." At the time, I didn't fully grasp what he meant. But as I studied the markets over the decades, as I watched currencies collapse, empires shift, and economic paradigms change, it finally clicked. Precious metals don't rise in a vacuum. They rise when trust in the system begins to crack. Think about it this way. Imagine you're at a party and everything seems fine on the surface. The music is playing, people are laughing, the drinks are flowing. But then you notice something subtle. A few people start quietly moving toward the exits. Not running, not panicking, just calmly heading for the door. You might not think much of it at first, but then a few more follow. And then a few more. That's when you realize something is wrong, even if you can't see the fire yet. That's exactly what's happening right now with silver and with precious metals in general. Silver has been called the poor man's gold, and for good reason. It's more accessible, more volatile, and historically, it's been the metal that everyday people turn to when they sense instability. When silver starts surging the way it has been, it's not because industrial demand suddenly skyrocketed. It's not because some new technology created a supply shortage. It's because millions of people around the world are starting to feel uneasy about the value of their currency, about the stability of their banking system, about the promises made by governments and central banks. Now, I want you to understand something fundamental about money. Real money throughout human history has always been something tangible, something with intrinsic value. Gold and silver have been money for thousands of years across every civilization. But what we use today, what's in your bank account, what you're paid in, that's not actually money in the traditional sense. It's currency. It's a promise. A piece of paper or a digital entry that says, "We promise this is worth something," and that promise is only as good as the trust people have in the institution making it. For decades, that trust has been strong. The dollar has been the world's reserve currency. Central banks have managed to control inflation reasonably well, at least on paper. But something shifted over the past few years. We've seen unprecedented money printing. We've watched government debt levels reach heights that would have been considered impossible just a generation ago. We've seen central banks manipulate interest rates to extremes, first near zero, then hiking rapidly, then cutting again. Each of these moves creates distortions in the economy, and those distortions eventually have to resolve themselves. When I look at silver's recent performance, I don't see a bull market in the traditional sense. I see fear. I see a lack of trust. I see smart money quietly moving toward the exits at that party I mentioned earlier. Because here's what most people don't realize: the wealthy don't wait for the crisis to hit before they act. They watch the indicators. They study the patterns. They understand that by the time the mainstream media is talking about a crisis, it's already too late to position yourself properly. The pattern is always the same throughout history. First, governments overspend. They promise more than they can deliver. Then, to pay for those promises, they print money. That money printing dilutes the value of the currency everyone is holding. Prices start to rise, slowly at first, then faster. People's savings lose purchasing power. The middle class gets squeezed. And the wealthy, they've already moved their assets into things that hold real value, productive businesses, real estate, and yes, precious metals. Now, let me tell you something that might surprise you. I'm not here to tell you to rush out and buy silver tomorrow morning. That's not the point of this conversation. The point is to help you understand the bigger picture, to recognize the signals that the system is under stress, and to think differently about how you protect and grow your wealth in this environment. You see, most people approach investing backward. They look at what's gone up recently and they want to buy it. They see a stock that's doubled and they think, I want in on that. But that's exactly the wrong approach. What you need to do is understand the fundamental forces driving the economy, the cycles that repeat throughout history, and then position yourself ahead of those forces, not chasing after them. Let me give you an example from my own experience. In the early 2000s, I could see that the housing market was building up massive imbalances, too much debt, too much speculation, prices that had disconnected from fundamental values. Most people couldn't see it because prices kept going up, and when prices go up, everyone feels like a genius. But I studied the data. I looked at debt to income ratios, at subprime lending practices, at the derivatives built on top of shaky mortgages. And I knew that when this house of cards fell, it would be catastrophic. That understanding allowed me to position myself appropriately, not to get rich quick, but to protect capital and be ready for the opportunities that would emerge from the crisis. The same principles apply today with what we're seeing in precious metals. The surge in silver is telling us that the foundation underneath our financial system has cracks in it. Now, that doesn't mean the system is going to collapse tomorrow. These things take time. They unfold over years, sometimes decades. But the direction is clear if you know how to read the signs. Here's what you need to understand about how wealth is really built and preserved. It's not about making one big bet and getting lucky. It's about understanding the economic machine, as I like to call it. The economy moves in cycles. There are short-term cycles that last months or a couple of years, and there are long-term cycles that last decades or even longer. We're currently in the late stages of a long-term debt cycle that began after World War II. This cycle involves the gradual accumulation of debt throughout the system, followed by a period where that debt becomes unsustainable and has to be resolved either through default, restructuring, or inflation. When you understand where we are in this cycle, everything becomes clearer. The money printing we've seen isn't a policy choice made in a vacuum. It's a necessity driven by the fact that the debt burden has become so large that the only way to service it is to create more money. But creating more money dilutes the value of every dollar already in existence. That's why silver is rising. That's why gold is rising. People are starting to realize, consciously or unconsciously, that holding paper promises might not be the safest place to store their wealth. Now, let me share with you 3 principles that have guided my thinking throughout my career, principles that are especially relevant in times like these. First, don't put all your eggs in one basket. Diversification is the only free lunch in investing. You want to spread your risk across different asset classes, different geographies, different types of investments. No one can predict the future with certainty, but you can position yourself so that you'll do okay regardless of which scenario plays out. Second, Understand the difference between saving in currency and saving in assets. When you keep money in a bank account, you're not actually saving in the way your grandparents understood saving. You're holding a currency that's being deliberately devalued over time. Real saving means converting your labor and productivity into assets that maintain or grow their value: a piece of land, ownership in a productive business, skills and education that increase your earning power, or, yes, even precious metals that have held value for thousands of years. Third, study history. Everything that's happening now has happened before in different forms. The Roman Empire debased its currency. The Weimar Republic printed money until it became worthless. More recently, countries like Argentina, Venezuela, and Zimbabwe have all gone through currency crises. The patterns are always the same. The details differ, but the fundamental dynamics remain consistent. Those who study these patterns can recognize them when they start to emerge and position themselves accordingly. So, what does all this mean for you, practically speaking? It means you need to think about your financial life differently. Stop thinking about just making money and start thinking about preserving and growing purchasing power. Stop chasing returns and start understanding risk. Stop following the crowd and start thinking independently about what makes sense. The surge in silver we're seeing right now is just one indicator among many. We're also seeing central banks around the world buying gold at rates we haven't seen in decades. We're seeing countries trying to reduce their dependence on the dollar for international trade. We're seeing pension funds and insurance companies struggling to meet their obligations in a low interest rate environment. We're seeing wealth inequality reaching levels that historically have preceded major social and economic upheavals. These aren't isolated events. They're all part of the same underlying dynamic, the same shift in the tectonic plates of the global financial system. Here's the thing that most people miss: the biggest opportunities in life come during periods of transition and change. When the old system is breaking down and a new one is being born, that's when fortunes are made and lost. But you have to be positioned correctly. You have to understand what's happening and why. You can't just follow the herd because, by definition, the herd is always positioned for the world as it was, not as it's becoming. Think about the people who built great wealth during the last financial crisis. They weren't the ones who panicked and sold everything. They weren't the ones who blindly held on hoping things would go back to normal. They were the ones who understood that the crisis created opportunities to buy assets at discounted prices, to restructure their portfolios, to position themselves for the recovery that would eventually come. But they could only do that because they had preserved their capital through the downturn. That's what this is really about. The surge in silver is a warning that we're entering a period of transition. The exact path that transition will take is unknowable. Maybe inflation will surge and central banks will lose control. Maybe we'll see a series of sovereign debt crises. Maybe the dollar will gradually lose its reserve currency status and be replaced by something else. Maybe we'll see a combination of all these things playing out over the next decade or two. The specific outcome doesn't matter as much as recognizing that change is coming and positioning yourself to weather it. Let me give you a practical framework for thinking about this. I like to divide wealth preservation into three categories: insurance, cash flow, and growth. Insurance means having assets that will hold value or even increase in value during times of crisis. This is where precious metals fit in. They're insurance against currency devaluation and system instability. You don't buy them hoping to get rich. You buy them knowing that if the paper system falters, you'll have something of real value. Cash flow means having sources of income that are relatively stable regardless of economic conditions. This could be a business that provides essential services, rental properties in good locations, skills that are always in demand. The key is that even if asset prices fluctuate, you're generating income that allows you to meet your needs and take advantage of opportunities. Growth means having exposure to productive assets that can increase in value over time as the economy grows and evolves. This includes ownership in businesses, whether through stocks or direct ownership, investments in innovation and technology, or developing your own skills and human capital. The key here is to focus on real productivity and value creation, not speculation or momentum. A balanced approach includes all three categories. How much you put in each depends on your situation, your age, your risk tolerance, and your goals. But the principle remains the same. You want to be diversified across different types of assets that respond differently to various economic scenarios. Now, I want to address something important. When I talk about these systemic risks and the need to protect yourself, some people hear doom and gloom. They think I'm predicting the end of the world. But that's not what I'm saying at all. I'm saying that we're in a period of transition, and transitions create both risks and opportunities. If you understand what's happening, you can navigate this period successfully and even thrive. But if you ignore the warning signals, if you assume that things will just continue as they have been, you're setting yourself up for disappointment. History shows us that these transitions happen regularly. They're not anomalies. They're a natural part of the economic cycle. And every time they happen, wealth gets redistributed. Some people see their purchasing power eroded. Others preserve and even grow their wealth. The difference between these two groups isn't luck. It's understanding and preparation. The beautiful thing about understanding these principles is that they apply regardless of how much money you have right now. Whether you're just starting out or you've accumulated significant wealth, the fundamentals are the same. You need to think about diversification. You need to understand the difference between currency and assets. You need to focus on building skills and income streams that provide stability. You need to study and understand the economic environment you're operating in. One of the biggest mistakes I see people make is thinking that financial education is something you do once and then you're done. They take a class, read a book, maybe watch some videos, and they think they understand money. But the truth is, understanding money and economics is a lifelong journey. The system is constantly evolving. New technologies emerge, regulations change, global power dynamics shift. If you're not continuously learning and updating your understanding, you're falling behind. The surge in silver that we're seeing right now is a perfect example of why continuous learning matters. If you don't understand monetary history, if you don't understand the relationship between money printing and inflation, if you don't understand why people turn to precious metals during periods of uncertainty, then you'll look at rising silver prices and think it's just another speculative bubble to either jump on or ignore. But if you do understand these things, you'll recognize it as a symptom of deeper systemic issues, and you'll think about what that means for your overall financial strategy. Let me leave you with this thought. The greatest wealth is not measured in dollars or silver or any particular asset. The greatest wealth is knowledge and understanding. When you truly understand how the economic machine works, when you can read the signals and recognize the patterns, when you can think independently and not just follow the crowd, that's when you gain real financial power. That's when you can navigate any economic environment, whether it's a boom, a bust, or a period of transition. The surge in silver is not just about silver. It's about what silver represents. It's a signal that the world is changing, that the old assumptions may no longer hold, that we're entering a new chapter in economic history. How you respond to that signal will determine whether this period of transition becomes a crisis for you or an opportunity. The choice, as always, is yours. But now you have the framework to make that choice with your eyes open, with understanding, and with the wisdom that comes from seeing beyond the surface to the fundamental forces that drive everything. Study the patterns. Diversify your assets. Build multiple income streams. Never stop learning. And most importantly, think for yourself. That's how you not only survive but thrive in any economic environment. That's how you turn warnings into wisdom and challenges into opportunities. The system is sending signals. The question is, are you listening?